Okay, it's the start of a brand new week. Our entire team is joining in to help us prep for the day and plenty of stocks to talk about. First up, some numbers coming through. Info Edge is on our radar. Reema's here to tell us how it looked. Reema, over to you.
Hi, good morning. So Info Edge has clocked in a revenue growth of 33.5% on a year-on-year basis. Now, this is slower than the over 50% growth that it's enjoyed in the prior 4 quarters. So on the top line, there is some moderation in the revenue growth. This is attributed to the slowdown in IT hiring. And we've heard this from the other staffing companies like Quest and TeamLease too, that IT hiring has slowed down considerably. And analysts estimate that for Naukri, which is a bulk of Info Edge's revenues, nearly 50% of the revenue of business comes from IT, and IT has seen a bit of a slowdown. That said, margins have improved for the company substantially. Margins are at 39%, practically at an all-time high levels, and that's because the ad spend has moderated. The ad spend as a percentage of revenues is down to 13.5% versus levels of 18 to 19%. At the bottom line, though, there is a loss of 84 crore because the company has taken an impairment charge in one of the investee companies. Remember, Info Edge invests in a lot of startups. One of the startup companies was 4B Networks. This was a B2B real estate platforms which help connect developers with brokers. So unlike 99 Acres, which is a B2C platform, this was a B2B platform. The company is saying that this company, 4B Networks, has been unable to raise funds. There is a funding crunch, which is why the company has taken an impairment charge in that business, and they've written off their entire investment of 284 crore, and that's the reason why there is a loss. Exceptional charge of 276 crore, and that's the reason why at the bottom line there is a loss of 84 crore, and the street might just start worrying that is this something which can happen to its other investee companies too. Back to you.
Okay, all right. Thanks a lot for that, Reema. Well, let's hop across to Vahista. Vahista, it's been a busy weekend for you in the last few days, but today you're tracking ABB and BHEL. How are those numbers?
Hi, Nigel. Good morning. Well, ABB numbers have been quite good. In fact, this was a result of the good execution of the domestic market as well as their export customers. The revenue growth has come in at 15%. Also, there's been an improvement in margins following the pricing actions. The margin expectation was 10.3%, but the actuals have come in at 15%, which means a 500 basis points near jump on the estimates. All segments have performed well. There were large volume orders in the industrial solutions and segments such as data centers and electrification. As expected, there has also been a sustenance of the order inflow momentum, and the order inflow for the entire calendar year of 2022 has crossed 10,000 crores for the first time. So I'm going with a green on this stock. The next result is BHEL. The results have not been bad. They have in fact been quite good. On an operating level, the company is profit making. In fact, the EBITDA margins have improved 100 basis points on a year-on-year basis and come in at 2.7%, though the finance costs have jumped this quarter. The power segment has also performed well, with EBIT margins coming in at 11.1%, which is to be compared with 8.3% in the same quarter of last year. So positive over there. The order book, though, is nearly flat at approximately 1.04 lakh crores. All in all, I would say it's been a good set of numbers for BHEL. In fact, the management has also highlighted that the demand momentum is quite buoyant. So going with a green on the stock as well for today. Back to you.
All right, thanks a lot for that. So those capital goods companies looking good, but the stock of the day on the downside could be Balkrishna Industries. Very weak numbers coming through this time. Total income growth was barely about 7%, but it's the operational performance that got really hit. Look at that. The EBITDA has gone down by 17%. The margins have fallen to sub 20% and big fall in profitability. The management, in fact, in its presentation has said that the company is experiencing a channel inventory clearance in the end markets. So there was a lot of excess inventory which is getting cleared, and in the OHT segments of highway tire segments as well as in other tire segments as well. Not just that, slow lowering of raw material prices and an improvement in delivery timelines has led to a slower ordering cycle by the channel. They continue to face challenges in the global markets, and recession fears continue to hit demand. So I'm going with a bright red over there. In any case, Balkrishna has been really volatile. You know, post numbers, there's a sharp reaction either way. And the last 3 months, the stock has been up 22%. So some profit taking today, perhaps.
Okay, all right. Sonia, thanks for that. Well, going back to Mangala. Mangala, what about delivery? How are those numbers?
Well, they were soft numbers. You know, quarter on quarter, the revenue growth was just about 1.5%. But operationally, there was improvement quarter on quarter. We saw the EBITDA loss come down from 138 crores to about 73 odd crores, and as a result of which on the bottom line as well. While the company remains to be loss-making, they have narrowed their losses from 250 crores to 195 odd crores. But year on year, the numbers look much worse. 9% decline year on year in terms of revenues, and EBITDA loss came in at 73 crores versus a gain of 54 crores. The company said that the revenue from their express parcel services, which is one of their largest contributors, was up 7% quarter on quarter, led by 5.5% volume growth. But the part truckload business was down quarter on quarter from 293 crores odd to 277 crores. While these numbers are soft, remember the stock is also down about 55% from the peak. Jefferies believes that maybe operational improvement is likely to continue, and with this decline, they see some green. But my sense is that these numbers are soft, so maybe a bit of a red to start things with.
All right, Mangalam, thanks very much for that. Sonal is here with details on Oil India. Sonal, hi, morning.
Good morning. It's a green for Oil India because it was a good set led by higher realizations, and despite the windfall taxes, the company has been able to deliver on oil realizations as well. So revenues at 5,300 crore rupees, EBITDA came in at 2,855 crore rupees versus 1,848 crore rupees. There was a substantial jump in margins as well, 53.1% versus 39.8%. Profits also flat on a quarter-on-quarter basis, but that was because of lower other income as well. Net oil realizations, they actually increased on a quarter-on-quarter basis to $77.1 per barrel versus $74.7 per barrel. Additionally, the Numaligarh refinery expansion, this is expected to be completed by FY24, FY25. The capex is around 28,000 crore rupees, which will be funded 70% via debt and 30% via equity. So it'll get commission, and that will add to earnings as well going forward. Motilal Oswal has a buy rating on the stock with a target price of 272. They like the fact that the government is allowing a post-windfall realization of $68 to $81 per barrel. That definitely bodes well for all the oil producers like Oil India and ONGC as well.
Okay, thanks for that. Well, NALCO is something that you should keep on your radar as well. Nigel, why is that?
Well, that's right. Too many weak earnings. So, Sonal and me are filling in for a couple of good earnings. Oil India was one, NALCO was the other. On the top line, there was an expected drop on the top line. That was more or less, unexpected line because LME prices have been weak. Moving to the numbers, they were good because on the EBITDA front, just take a look at it. On a sequential basis, there's a good improvement. From around 10% or the margins have moved to around 14%. Even the absolute number has gone up. So I like that. Two factors played out. One is on the base, you had in the base year, you had the employee cost, which was very high. So on that high base, employee cost is down by close to 21% on a year-on-year basis. And the second factor, the cost of power, well, it's come down dramatically actually on a sequential basis. It's down by close to around 20% on a sequential basis, and a percentage of sales, it's come down to around 33%. The aluminium as well as the chemicals business, that's alumina business, comes up for you. And on the aluminium business, there was improved performance. So explains why the stock should open up in the green. But Surbhi is with us to tell us about PB Fintech. Good numbers?
PB Fintech reported its third quarter numbers, and the company is on track to achieve adjusted EBITDA break-even by the fourth quarter of this fiscal. Their total revenues were up 66% at 610 crores as the insurance premium grew by 70% on a year-on-year basis. Their EBITDA losses have narrowed to 133 crores versus a loss of over 300 crores same time last year. In their existing business, the profitability continues to improve. The revenues were up 34% at 425 crores, and they reported an adjusted EBITDA profit of 26 crores versus a loss of 41 crores same time last year. In their new initiatives business, the revenues were up almost 4 times at 185 crores, and the burn rate in this segment has come off sharply. They have reported an EBITDA loss of 54 crores versus a loss of 51 crores same time last year. It's the margins which have contracted sharply at a negative 29% versus a negative 100% same time last year. The management has maintained the guidance of achieving 1,000 crores of PAT by FY27.
All right, thanks very much, Surbhi, for that. Now, Glenmark and RVNL are the next two stocks we're going to focus on. Ekta is here with the details. Ekta, morning.
Thanks for that. I'll start with Glenmark. Revenue was up around 9%. Street was anticipating a 6% growth. Margins in line with estimates at 18%. Profit was better than expectations at around 290 odd crores. India was up only in single digits, so that was a little bit of a deterrent. But US sales did well, so $100 million in terms of US sales for this quarter. Objectives for FY23, revenue growth of 6 to 8% sustain, EBITDA at similar levels for FY22, enhance the free cash generation and potential out-licensing of innovative assets. So they haven't really changed their guidance for FY23. Call is at 9:30 a.m. today, so more details then. Real Vikas Nigam, we can expect the stock to probably be in the red. Revenue was flat. Margins came down to 5.5%, but the profit was up around 30-odd%. But the flattish performance on the revenue and the margins should probably result in the stock seeing some profit booking.
Okay, got that. Thanks a lot, Ekta, and thanks to our entire team. In case you missed out on any of the stocks, here's a quick recap. Stocks with positive news flow. There's ABB India, BHEL, Oil India, NALCO, PB Fintech, as well as a couple of others that should come up for you with Glenmark Pharma. And stocks with negative news flow, there's RVNL, Info Edge, Balkrishna Industries, very weak numbers, and Delhivery as well. But let's put focus now on the Adani Group stocks. Adani Ports, Ambuja Cements have moved out of the ASM framework. In fact, a lot of them recovered last week as well. Let's find out what's the latest here. Vivek is here to give us details. Vivek, over to you.
Well, absolutely right. Quite a lot of news flow over the weekend as well. So as you mentioned, Adani Ports and Ambuja Cements have moved out of the ASM framework, which means that the additional margin requirements have now come down. But it's important to note that Adani Enterprises continues to remain within that particular framework. Now, the other thing to keep an eye out for is that rating agency Moody's, while they have not cut the rating on any of these companies that they are actually tracking. However, what they've done is they have reduced the outlook that they have from a stable stance to a negative stance on 4 out of the 8 stocks that they actually had coverage on. So Adani Green Energy, Adani Transmission, and 2 other groups within this particular 2 stocks itself, they have actually gone ahead and reduced their outlook. Lastly, some more pledging activity has happened as far as, some of these stocks are concerned. So in favor of SBI Cap Trustee, you're actually seeing further pledge being created in Adani Ports, Adani Transmission, and Adani Green. Adani Ports, the pledge has now gone up from 0.65% to 1%. Adani Transmission, the pledge is now up from 0.44 to, 0.5%, and Adani Green up to almost a little over 1%.
Okay, all right. Thanks, Vivek, for being on top of the entire group of stocks for the time being. Ahead of that Supreme Court hearing on the Adani Hindenburg issue later today, the Finance Minister reiterated that India's experienced regulators are on top of such issues and will handle them appropriately. Let's listen in.
India's regulators, and I'm sitting in the company of a very senior regulator, one of the oldest regulators in this country. India's regulators are very, very experienced. And they are experts in their domain. So the regulators are fairly seized of this matter and they are on their toes, as always, not just now. So I would leave it there, because you've just told me what has come out this morning. I'll leave it there.
Okay, so that's the Finance Minister reposing full faith in regulators who are looking into the matter. We'll take a very quick break here. Prakash Devan is with us for a quick chat on markets. We'll discuss specific stocks, results, etc. And after that,